Coming up on the show, Morocco's king warns of severe economic repercussions due to COVID-19. South Africa's Escom halts power cuts after recovering 3 coal units. Plus, Qatar Petroleum enters exploration agreement in Angola. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwawu. Let's get the show started with the markets, and major markets will track here in Africa. We're in the green at intraday. South Africa's JSE index jumped 1.14%, while Nigeria's main index rose 0.27%. Egypt's EGX30 closed for the week positive on Thursday by 0.75%. Kenya also ended Thursday's session positive. And major stock markets in the Gulf closed the week negative on Thursday, hurt by losses in financial shares, although the Abu Dhabi index bucked the trend to close higher. In Abu Dhabi, the index gained 0.94%, driven by a 6.5% jump in Abu Dhabi Commercial Bank and a 6% rise in Alda Properties. On the flip side, Dubai's main share index fell the most by 0.50%, weighed down by a 1.2% fall in Sharia-compliant lender Dubai Islamic Bank and a 2.6% drop in logistic firm Aramex. Elsewhere in the region, the Qatari index declined 0.47%, while Saudi Arabia's benchmark index slipped 0.13%. And in Europe, stocks traded slightly higher on Friday, seemingly shrugging off disappointing economic data out of the Eurozone, while geopolitical tensions remain in focus. All right, let's bring in Ulrich now. Hello, Ulrich. Good afternoon. While investors were presented with contrasting reports and progress towards economic recovery from the coronavirus in Europe and in the U.S., what did the reports say, and how are markets reacting?
Well, the markets have come off their gains, and they're now headed downwards as the afternoon is wearing on. You can see the curve behind me where the DAX is clearly losing steam, and it's now losing over 1%, and you see a similar picture in other European markets. It was mixed news while in the United States, economists polled by Reuters are expecting a stronger comeback of the economy there than previously expected. Here in Europe, the PMI, the Purchasers Managing Index for the Eurozone shows strong growth in August. But here in Germany, mixed message. Industry is doing better, but the service industry, that is restaurants and everyone who doesn't produce something but who provides services, they really felt the effects of lockdown still, of consumers still not spending money. So in total, you see a slowdown of the recovery in Germany, and that's not good news after several months of the economy here having surged ahead.
Now, tech shares were soaring on Wall Street as Apple and Tesla reached new record highs. Are traders in Frankfurt elated, skeptical, or just plain envious?
a little bit of all three. And when you look at Apple and Tesla, it applies basically to both of these. Take Tesla. For years, people were saying, what a bloated development here, too little to back up the high share price. Already in the past years, when Tesla was passing by Ford or companies like Daimler in market value, they were producing, a fraction of the cars and not really making any profit. And people thought this was a business model that was going to go south sometime. Sure, they had good electric cars, e-cars, setting the standard there for the industry, but there just was not enough oomph there. Well, that seems to be changing, because the numbers that Tesla is making are increasing. And also I hear different tunes from analysts I speak to here in Germany, for example, on Tesla's fortunes. And many people are lauding the way that Tesla is going forward and also marketing its successes. Way different picture at Apple. The surge there always seemed to be backed up by the business. The fundamentals are strong there, and the very high share price, even now, yet it's high, but it seems in line with the fundamentals, the sales growth and the profits that's generated by that. Albeit with Apple, alongside with Envy, there's been skepsis now for years that that kind of growth could be sustained. So far, that skepticists have always been proven wrong, but that, in the case of Apple, remains.
And German pharmaceutical giant Bayer has gotten closure on a prickly legal problem. It's about U.S. claims over the birth control device issue. Tell us more.
Yeah, it's not the big one. It's not glyphosate with the weed killer behind the chemical that's behind the weed killer Roundup. They're settling claims is still a little bit in question, but the closure on Escher is surely good news for the company because there was also a lot of money there at issue. The settlement is for $1.6 billion, and it's a non-hormonal coil that was in question here. It was discontinued in 2018, but there were many, many cases piling up and getting more and more in the United States. So this is expensive, but it surely must be good news, especially from the point of view of the company, from Bayer. The share is not reflecting that this Friday. It's basically unchanged, not moving much.
All right, thank you very much, Ulrich, for your time. It's been a great week with you. Enjoy the rest of the weekend.
Thank you.
And in the UK, a barrage of data out today, and that's where my conversation with Simon will start. Hello, Simon. Good afternoon again. Well, it looks like the downturn in UK manufacturing may have bottomed out, perhaps thanks to the Eat Out to Help Out scheme. But the sad thing is that job cut mounts.
Yeah, absolutely. It's been a really tough time for manufacturing in the UK, as it has in many other countries. UK manufacturing output volumes in the 3 months to August continued to fall quickly, but the pace of decline has eased somewhat from last month's record. This is according to the latest CBI monthly industrial trend survey, which is a survey basically of 278 manufacturers. The headline drop in output being mechanical engineering, food and drink, and tobacco and motor vehicles. So orders were well below normal and signs that a weak recovery is underway. The survey results show some early signs of the manufacturing downturn bottoming out, as you said, but it is clear that many firms remain in distress and the sector looks set for a challenging autumn. CBI Deputy Chief Economist Anna Leach said this has been another difficult month for manufacturers, and she also said that hard times continue to lie ahead.
And we've also learned that UK retail sales are now above their levels before the pandemic struck. What could be attributed to this surge?
Yeah, so the Office of National Statistics, or the ONS, says sales are now 3% higher than February before the World Health Organization declared a pandemic and the UK was placed into lockdown. Clothing sales grew last month and people spent more money on petrol. The growth in new orders was linked to the reopening of businesses alongside a greater willingness to spend among UK households. Fuel sales rose by 26.2% between June and July. They remain far below pre-pandemic levels, but it's really interesting that this has happened because the Eat Out to Help Out scheme has got people back onto the streets, onto the high streets, and lots of analysts saying that the high street recovery is actually incredibly impressive. It's sort of recovering faster than online sales. So a bulk of all of that has meant that, as you said, the ONS says that sales are now 3% higher than before February. So there's a lot of doom and gloom around, but at least that piece of news is a ray of sunlight in troubling times.
Absolutely. And how are the markets reading these data, and what is the outlook for next week?
Yeah, despite news that UK recovery from the coronavirus and its financial implications is going faster and better than expected, the FTSE slid in early morning trading today. It's recovered a little, though, maybe boosted by news that those UK retail sales are now 3% higher than February. A few minutes ago, the FTSE All-Share was very slightly up by 0.03%. The FTSE 100 also up by a tiny amount by 0.04%, and the FTSE 250 is positive too. The British pound lost early strength versus the euro on Friday and fell against the rising US dollar. It was influenced by better than expected British economic data, but also Brexit worries, which threw in some volatility. A few hours ago, chief EU negotiator, Brexit negotiator, Michel Barnier said on several topics, both sides were actually moving backwards. He says a trade deal now seems unlikely. No doubt that will have influenced the pound. So as we stand, this is the situation. It is down slightly on the dollar, 0.64%. It is up very slightly on the euro by 0.2%, and it's also down on the Japanese yen. The pound has been really good, a really good currency. Sterling done so well against other currencies for pretty much a month now. But I think as these Brexit negotiations and talks over the trade deal continue to sort of go nowhere, seemingly, the pound could really be hit hard by that. And also there's the whole situation with China and the US and trade talks there too. So the pound has been stable for a while, but who knows next week.
Well, it's time to say thank God it's Friday, Simon. Enjoy the rest of the weekend.
Thank you, you too.
And Asia-Pacific stocks rose on Friday following the release of mixed U.S. economic data overnight. South Korean markets attempted to bounce from Thursday's losses as the Kospi gained 1.34% to close at 2,304.59. Mainland Chinese stocks were higher on the day, with the Shanghai Composite advancing 0.5% to about 3,380.68, while the Shenzhen component jumped 1.17% to around 13,478 points. Hong Kong's Hang Seng Index rose 1.3% as of its final hour of trading. In Japan, the Nikkei 225 rose 0.17%, while the Topix Index added 0.3% to end its trading day at 1,604.06. Australia's S&P ASX 200 closed 0.14% lower at 6,111 points. And U.S. stock futures rose on Friday as traders were set to end the week, which saw the broader market reach a record level. Dow Jones Industrial Average futures traded 36 points higher. S&P 500 and Nasdaq 100 futures also both traded mildly higher. Earlier this week, the S&P 500 broke above its late February high and notched a fresh all-high time. The S&P 500 ended the previous session up 0.4% for the week, while the Nasdaq was up over 2% week to date. And on the global oil market, oil prices climbed on Friday and was on track for a third consecutive weekly gain, pulled higher by major oil producers. Efforts to hold back output amid concerns about economic recovery from the coronavirus pandemic. Brent crude futures were up 0.4% at $45.07 per barrel, while U.S. West Texas Intermediate crude futures rose 0.3% to $42.95 per barrel. Both benchmark contracts fell around 1% on Thursday on economic concerns after weekly U.S. jobless claims came in higher than expected. And metals market, gold recovered on Friday from a side of more than 3% in the last session after U.S. jobless claims unexpectedly topped 1 million again, and the Federal Reserve minutes reiterated concerns over economic recovery. Spot gold rose 0.6% to $1,940 per ounce, while U.S. gold futures settled down 1.2% to $1,946. Elsewhere, silver gained 1.2% to $27.04 per ounce. Platinum dipped 2.2% to $911.40, and palladium rose 0.3% to $2,163. And away from the markets, the King of Morocco, King Mohammed VI, has warned of severe economic repercussions and says Morocco could return to a complete coronavirus lockdown as cases continue to spike. The warning came as a jump in infections in the once bustling tourist hub of Marrakesh strained health services and led to protests by medical staff in recent days. The Moroccan economy is expected to contract by 5% this year, while the budget deficit is forecast to deepen by 7.5% of gross domestic product. New cases nationally have surged to more than 1,000 a day since Morocco lifted a strict 3-month lockdown in late June and hit a record high of 1,766 cases on August the 15th. We'll take a break, and when we come back, of course, we take our focus to Congo, where we discuss the economy. Do stay with us. Before we go to Democratic Republic of Congo, Qatar Petroleum has entered into a farming agreement with Sonangol, the national oil company of Angola, and Total to acquire a 30% participating interest in Block 48, located in the ultra-deep waters offshore Angola. The block, with a drill-ready opportunity, covers an area of approximately 3,600 square kilometers and is expected to be drilled as part of a 2020-2021 drilling program. The farming agreement is subject to customary approvals by the Angolan government, but when approved, Total will have 40% interest as the operator, while Sonangol and Qatar Petroleum will have 30% interest each. And South Africa's Escom has suspended its planned power cuts after 3 generating units at coal-fired power stations returned to service overnight. According to Escom, more power cuts had been due on Friday, but supply constraints had eased following the recovery of units at the Lethabo, Medupi and Kusile plants. Unplanned breakdowns stand at 8,750 megawatts out of Escom's nominal capacity of 44,000 megawatts, compared to breakdowns of more than 11,900 megawatts at one stage on Tuesday. Escom's struggles to power Africa's most industrialized nation are one of the main obstacles to economic growth. The Democratic Republic of Congo's economy has been under significant strain from the COVID-19 pandemic, with foreign currency reserves shrinking and mining companies taking longer to repatriate the 60% of mineral sales. Well, the government, both fiscal and monetary authorities, have taken some measures to keep the economy going in the face of the COVID-19 pandemic. How are these measures playing out? I'm being joined by a financial expert in Democratic Republic of Congo, Gislan Muhiwan. Good afternoon, Muhiwan. Thank you for joining us.
Yes, good afternoon. Good afternoon.
So what is fighting COVID-19 like in Congo? How has the government of the Democratic Republic of Congo responded to the pandemic so far?
Since the pandemic was coming in the DRC, the government took many measures to fight against this pandemic. And the first it was to stop more activities around the DRC, for example, churches, school, and also to take some economic measures to see how they can how we can help the economy in this moment of the pandemic, because it is really a great challenge, and it is for the government to take some responsibilities to see how they can help people. And one of those measures was to ask all those societies who provide water and electricity to give it freely to all the people across the country. And it was for 2 months, but it was not significantly, because the pandemic is continue to be in the country, and it is very difficult for people to live. Other measures was especially for monetary politics or financial things, or also in fiscal affairs. For instance, they ask some companies who are which are working on the pharmaceutical things, to bring the goods freely. So if they want to export goods from other countries to DRC, it can be free, and also for those who was in some companies which were with good administration, to see how they can do exoneration to them, especially to decrease the fiscal expenses, because during the moment of the COVID, there are many people who are not sending their goods.
All
and
right.
also other measures. So it means the government took many measures to see how they can contain the pandemic context.
Right. Now, earlier this week, the central bank made a huge rate a hike to 18.5% from 17.5%. What do you make of that decision, particularly at a time like this?
The first thing is in the DRC we have an external economy. It means we depend on foreign economies. Those we don't have many intern production, and when the pandemic the pandemic began, all the country around the DRC was they didn't accept people to get or to get in their country or to come from their country. And so we have many difficulties in the country because some products, we lost some products, we lost some goods, and that had a great impact on the monetary rate. Which it means we live from a rate which was very, very high, very cheap, and to a high rate. Today we are in 2,000 francs, Congolese francs for $1. So 2,000 Congolese francs for $1. And the government saw that it is a great problem, and they took some measures. One of that measures is to fix the direct rate to see how it can help people to stabilize the money, to stabilize the situation on, and to stop the speculation on the monetary market. And I think it is a good measure to help people, to help also population to be able to see what is the good rate, what is the good rate we can buy with, we can sell with. And today in the Democratic Republic of Congo, we see a small stabilization, but in some part of the country, the situation is still the same, which means we have some people who are fixing the rate that they want, and it is really a good challenge for the central bank. And I know they are thinking about what they can do in this moment because
Okay.
people need solutions to challenge
Yeah.
like them.
Mr. Muhiwa, just few minutes before I let you go, the central bank also raised its 2020 GDP forecast to about minus 1.7% from minus 2.4% projected earlier due to the higher mining receipts. For you, as a financial analyst, what is your own outlook for the economy?
I think is a measure which can help, but it is not realistic because when we are in this pandemic moment, people are not producing, people are not working as they worked before. It means that all economic activities are not ruling in normal, and I don't know why they can increase the that PDC in this context. What can be done is to sensitize people, to encourage people or those business men to see how they can create more companies. Because I remember in those measures the government took to stabilize the economy, there was some strategies to see how we can bring people to create new companies, to create new or to launch new ideas in the economy. But
All right.
those measures are not working because we are living nowadays in the global economy. When people are not connected.
Mr. Muhiwa, thank you very much for your time there. Gushlan Muhiwa is a financial expert in DRC. Well, it's on that note that we wrap up today's edition of the program and, of course, for the week. Thank you for being part of it. I'm Chimezi Obi Iwago.